This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Matthew Sullivan, CEO and founder of QuantmRE. QuantmRE is a unique real estate marketplace that makes home equity accessible, investable, and tradable. They solve a major problem for homeowners that want to access their home equity with no monthly payments and without the burden of additional debt. For investors, they offer the ability to access this vast, untapped real estate asset class with a marketplace where their investments can be bought, sold, and traded. Matthew, thank you for joining us again.
Thank you, Hall. Thank you for having me back.
I think the last time we talked was in 2018, and of course, the world has progressed and changed quite a bit since then. So,
I think understatement of the year award there. Yes.
There you go. And so, looking forward to catching up to see where you've taken QuantmRE since we last talked about it. But before we do that, what was your background before investing in real estate?
My background is very much entrepreneurial. So I started off, I think my early years in the late 80s, if any of us can remember those, that's 1980s, not 1880s, was as a stockbroker. So I used to broker the Far East market. So my introduction really to finance was, very much baptism by fire, where I was sort of, a stockbroker broking Hong Kong, Singapore, Malaysia, Thailand, Indonesia, some fantastic markets, and then moved into corporate finance. At that stage was sort of mid to late 90s, worked with Richard Branson for a number of years on a number of the Virgin projects. And then really early 2000s, embarked on an entrepreneurial career really at the same time that the internet was launched. So I was one of the very early sort of internet, I wouldn't say pioneers, but we built a company that was very internet focused. I think really before anyone had any idea what the internet was or was going to be. But it just felt like a really exciting place to be. And so I've really focused on finance and technology, but always wanted to get into real estate. So moved over to the US 7 years ago, landed in Orange County, which really is, the epicenter of, real estate, and launched a crowdfunding company where it was a real estate crowdfunding company. So that helped, that enabled me to, combine my, finance and telecom sort of technology and, real estate aspirations, and launched an early stage crowdfunding company. And about sort of 3 or 4 years ago, stumbled across this really interesting real estate asset class, which is the ability to invest into the equity in owner-occupied homes, which really sort of captivated me. And we set up QuantmRE very soon after that to try and, find a way to, create a marketplace and some sort of dynamism out of what was a very early but incredibly interesting asset class.
Great. And so what excites you right now?
Really, I am delighted to say that the business that I set up 3.5 years ago, QuantmRE, still is the most exciting thing on a business side for me, each day, because we had this vision of making home equity accessible, investable, and tradable. And that vision just has remained in place like this beacon. And the world has obviously changed, but it's also developed. So a number of the things that we wanted to do 3 years ago, we couldn't do because the regulatory environment wasn't there. Our platform is based on blockchain technologies, and those were still, a little early. And this whole concept of unlocking equity without debt was still very much in its infancy. All of that has moved forwards. So that's really enabled us to get a lot closer to achieving our original objectives. And the excitement that you get from, seeing your dream block by block and bit by bit come true is incredibly motivating.
Great. So what's your advice for people investing in real estate? What do you tell them to do before they write that check?
What's the expression? Do your own research. Treat it as a job. Now, the problem with real estate is it's not liquid. So if you make a mistake buying the wrong stock, the chances are you could probably cut your losses and sell your shares the following day. And then you go and you walk around with a a cloud over you for a few days, and then you'll get over it, and then but you've got your cash. Now, the problem with real estate investing is it's nowhere near as liquid. So if you get involved in a real estate transaction, then it's something that you can't take lightly, because there are all sorts of longer term implications. So you've got to treat it as, if you're an active real estate investor, treat it like a job. So in other words, do your research, work at it, make sure you understand what the risks are. I wouldn't recommend that you don't go in. I think the most important thing is that you do invest, that you do get the shovel dirty, as it were. But just because it's real estate doesn't mean that it's automatically going to go up. There are all sorts of moving parts involved. Read as much as you can, understand as much as you can, go to as many meetings as you can, speak to as many people. And then when you do make your investment, do it from a point of knowledge and a point of understanding and a position of knowledge, rather than simply sort of a click and hope situation.
Well, great. So where do you see the real estate market going now that we're coming out of COVID? What do you think is going to happen next?
Well, I mean, real estate is, there are so many different types of and levels and strata within the real estate, stack, as it were. So talking about residential real estate, it's interesting because the market has been stronger over the past 12 months than anyone would imagine. And I think really that's a function of supply and demand. And I don't mean to, state the obvious, but there's been less demand than is anticipated, and there's been less supply than anticipated and far more demand. I think the market that we deal with, which is traditionally the coastal towns, or the coastal cities rather, that, it looks like that will continue to be strong. So we don't see any signs of softening or collapse or bubbles in any of the real estate markets that we work with. We anticipate that prices will probably slow down and the growth will begin to dial back, but we don't see any impending bubble on the horizon. And that's primarily because the amount of lending compared to previous years is far less, and the amount of ownership is far greater. What we are seeing is a much higher percentage of equity than has ever been owned before. And there are a number of problems associated with having a ton of equity in your home and not being able to get your hands on that. So again, that's one of the problems that we hope we can solve.
Well, tell us more about unlocking your home equity. How does that work, and who is it for?
The problem that we solve is primarily for residential homeowners. So this is not a commercial product. It's designed for people that have built up equity in their homes and either cannot borrow money or don't want to borrow money, because the only way that you can unlock the equity in your home right now is to go deeper into debt. So that is by way of a mortgage, some form of cash out refinance, a home equity line of credit, or a reverse mortgage in some cases. Now, the way that our programs work is very different. It's not debt. So in a commercial transaction, there are a number of different ways of funding a commercial property deal. You have senior debt, junior debt, mezzanine, there's senior equity, there's equity, there's a shared appreciation mortgage, which is a combination of debt plus a share of the equity upside. The difference is, if you are an equity investor in a commercial property, you do not expect to get a monthly payment. You do not expect to receive interest because it's not a loan. Now, all of those different ways of funding commercial real estate properties, only very few of those are available to residential homeowners. So if you're a homeowner, the only way you can finance your home is through debt. So, a bank loan of some variety. So there are a number of different commercial financing policies that are just not available. Our program makes some of those equity-based funding processes available to the residential homeowner. So the way that a home equity agreement works is very similar to an option agreement, where the homeowner, in exchange for a lump sum, agrees with the investor that when they sell the property, which can be up to 30 years, or if they agree to buy back the agreement, when the agreement terminates, the homeowner will give back the original investment amount together with a share of the appreciation. So the investor gets paid not through interest or through some sort of loan capital, they get paid further down the road by sharing in some of the appreciation. Now, even though it's a longer term strategy, it's great for investors because they get an asset-backed investment where they get a return that is based in some cases on a multiple of the house price appreciation. It enables investors to buy into homes that are not for sale, and they don't have the carrying cost or the expense of owning the underlying property. So they don't have to own the property. They don't have problems with toilets, tenants, trash, and termites, the four T's that we love. But they do benefit, they share in the appreciation. So it's a very useful investment mechanism. For the homeowner, it's very useful because they get cash up to $500,000 with no immediate tax implications. Tax is deferred, and they can use the money on whatever to spend on whatever they want. Most importantly, there are no monthly payments. So it's not a debt product. It does not appear on their credit report as debt. They can use it to get current with their mortgage, to pay off their forbearance, sums that they owe, pay off credit cards, or they can use it to diversify into other investments, put a down payment on another property, or invest and diversify into other, more liquid instruments.
So who is this good for, or what is the ideal profile of someone that owns a house that wants to do this, or what's your criteria for applying it?
Well, the criteria is all dependent on equity. So it really depends on how much equity you have in your home. So we're looking for homeowners really who start off with a minimum of 40% equity. So that means that their current loan to value is around 60%. That enables us to unlock some equity, and that increases the combined lien to value. So if you add the amount that we invest to the amount of their loan, depending on the state, that can cap out at about 80%. So in other words, we are able to invest between 20 and 40% of the current value of the home, depending on which state you're in and how much equity you have. So first of all, we look at the amount of equity. Then we need to make sure that you are likely to continue to pay your mortgage and your taxes and the other obligations you have. So we have a minimum credit score of 550. Now, we can be flexible on that, but that is really just designed to give us an indication that you are likely to be in a position to continue to make your payments, because we don't want to be in a position where the bank forecloses on your home. So we operate both with our own capital and with our through other investment companies that we work with in 19 states. The typical customer profile is a range of people who have equity in their homes but have issues with credit or loans that they need to repay and simply cannot borrow money, so they can't access the equity in their homes in a traditional way. We have people that have equity but don't want to borrow money. So let's say you're retired, you have an income, but you don't want to borrow money. You don't want to go into debt. You don't want to have that feeling that if you miss a payment, that the bank can take away your home. And there are those people that want to diversify. So they see their home equity as a concentrated single asset that provides no cash flow, and they want to change that so that they've got some cash flow or they've got some liquidity. So they will unlock some equity and they will invest that into another instrument or possibly invest into another home. So it's really a range of people, from those that need the money and to those that want to diversify.
Are there any tax implications on it?
The tax treatment is very benevolent. In other words, the capital that we unlock is tax deferred. So there is no immediate income tax or capital gains tax liabilities. It's a capital gains tax transaction. So when you sell your home, if you have a capital gains tax liability, you can reduce your liability with the amount that our investment has cost you. So the cost of the money can be offset against your capital gains tax liability. And that's very interesting, because if you were going to pay the IRS a certain amount of capital gains tax, and that capital gains tax bill is reduced by the amount of the cost of our funding, that means the real cost of our funding is actually a lot lower. So in some cases, particularly in jurisdictions like California, where the combined taxation can be approaching 50%, it means that the true cost of our capital in real terms is up to half what it would be at a nominal level.
And how complicated is it to put one of these projects together? How long does it take, and what kind of paperwork do you have to go through?
Very straightforward from a homeowner's perspective, typically 3 to 4 weeks. It's an online application. We just need some standard information such as your identification, need to find out a little bit about your mortgage, make sure your property is insured. We'll send an appraiser out that's appointed independently to make sure that we've got a clear indication of what your current property value is. And in cases that are straightforward, typically these will close within 4 weeks. Occasionally we have complications on title due to ownership or other issues, so it can take a little bit longer. So it is very straightforward, very high level of transparency from the homeowner's perspective. So the contracts have all been designed so that there are no potential issues. All of the costs and all of the things that you would expect to see as a homeowner or as a participant in the contract, they're all very clearly laid out. So it's a very straightforward process.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think really the interesting thing is just the fact that I think the US certainly is ready for a new type of home financing option. I think really it's one of the questions you asked earlier was, what are the challenges that we have with this? And I think our biggest challenge is education. In other words, trying to get across how these work, why they're different, why they're not alone. The questions we get most frequently are, it's too good to be true. I don't have to make any monthly payments. How can that be? And so if we can get across how these work, why they're different to loans, and how the investors do get paid and they do make a good return. And I think really there are so many opportunities for these types of equity-based funding alternatives, because it could unlock enormous amounts of capital for homeowners without the burden of debt. So you're not increasing the leverage on the home, yet that capital can work its way back into the economy. And so I think what COVID has done is really upset a number of previously held entrenched beliefs, and has really opened our minds to all sorts of things, good and bad, that we never thought were possible. And we hope that this opens the door from a sort of like a psychological perspective. And we want people to realize that equity is just another form of wealth that can be tapped in a way that really doesn't burden you with debt. And so that points to a very bright future for some people that thought that they were really in a position where they couldn't be helped.
Great. Well, how best for listeners to get back in touch with you?
Well, everything's on our website. So it's QuantmRE, QuantmRE.com. So we have videos on there. We have podcasts. We have a calculator where you can find out how much equity you can unlock in your home. All of our contact details there. The most important thing is that there are human beings behind the website. So we're there ready to answer any questions that you have. So if you reach out to us, we'll be happy and delighted to jump on a call to explain how this works and how it could benefit you.
Well, that sounds great. We'll have to check it out. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Wonderful, Hall. Thank you for having me on.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.